Hey guys, John Henry here, taking a look at the market psychology coming in on the S&P with a very interesting day. Now, you may look at the chart and think, well, what's so interesting about a range, right? Well, ranges are one of the most psychologically active type trading days that you can really get your hands on because there is so much going on. You have an up and then a down and then an up and then a down, and they keep fighting over who's in control. Now, if you've been trading for, a decent amount of time, you know that you likely had some issues trading range days when you were newer because they are very difficult, and it's usually the last thing that people pick up on how to trade, and that's a range day. Now, a range day in this situation, we had a very nice gap higher here, and that gap higher we initially saw not really that good a follow through from the bulls, right? Very, very weak. Lots of wick on the top, but there's wick on the bottom too. We're not seeing that bullish conviction like a good bull candle would look like this or like that. So we follow it up with even more indecision, more wick on the top. The wick here is almost the same size as this candle back here, so we're getting more and more indecisive. We have a lower high in terms of the wicks inside here, and this does end up being an inside bar with a bull bias. And the buyers are likely going to try to buy this for a breakout move to finally, fingers crossed, get that follow through that they've been looking for, and it breaks out, and they get a doji into a bear bar, and then we start pulling back, right? That's the complete opposite of what buyers want to see. And now buyers, given the fact that they've been waiting for this for 5, 10, 15, 20, 25, 30, 35 minutes, and we're still not going, we're not getting that conviction, they're starting to realize, hey, we might be on the wrong side of this, right? Maybe I don't want to be a buyer right here. This could be the start of a range, and I'm at the top of that range. Maybe I should begin selling instead. And you can see when it goes doji follow through into a bear candle, and then as soon as that bear candle is broken underneath after it's gone engulfing, meaning that it turned up through the highs first and engulfed through the low, everybody bailed on the long side and jumped into the downside and slammed it lower. Now, this is where it gets really tricky, because if this is a range day, we know that we need to be selling high and we need to be buying low. And when we come down here to the low of that RTH session, there are going to be a lot of people that see that candle and think, man, look at that thing, right? We're going to tumble all the way off the highs and we're just going to fall right back down, and we're going to hit all of these levels of support underneath us. I'm going to sell this thing like crazy. They sell it, they get a beautiful bear candle initially, and then everything dries up, right? They go underneath that RTH low, buyers buy this thing like it's candy, and we turn up into what is a good bull candle. This is the kind of candle that you want to see to get into a trade, and that's exactly what you should be doing here, looking to the long side, buying low in the range, and looking to sell it back up towards the highs for a quick little move back up. Now we get back up to the highs, you'll notice there isn't an arrow up here, and that's because initially you really are looking to sell, but you need a good candle. And by the time we get up there, we get this gargantuan bear candle that nobody in their right mind is going to want to sell under. It's way, way too close to the bottom now. Everyone wanted to sell up here, right? They don't want to sell all the way down here. That's almost all of the profit gone already. So what do we expect then? There are going to be sellers that take it anyway, and they're going to get stuck in the move. It starts to go against them. They try to take it back, and you can see one tick underneath that they tried selling it again for a continued move lower. Immediately turns back up. Now we have the sellers right by the neck, and we know their stops are above the highs, and that is a beautiful place to buy, and then buy again, knowing that we can get a breakout through those highs back up through the upside. Now, we've gotten the breakout. We've whipped the sellers out. We stopped them all out, and we have a big burst up through the highs. This is still a range day, and we have to be thinking that there are going to be a lot of buyers that are going to try to buy along with this move, looking for a further breakout, when in reality, we're high, we should be looking to sell. And we get a beautiful follow-up sell, little inside bar, very small risk, and that allows us to scalp at least back down to the moving average. And that goes to show you that you can play both sides of a range as long as you know where to get in. And that's the importance of combining market psychology along with technical analysis, and you can know exactly where the folks that are on the wrong side of the market may be getting trapped in, and where you can take advantage of that information. So hopefully you learned something here, hopefully you found it enjoyable, and we'll see you next time.